10 money mistakes I made and how you can avoid them to get rich in 2025.
What makes this one really interesting is that it's not just some random advice. It's from someone who's actually been there.
The first one that really stood out was waiting for that perfect time to invest.
Oh, yeah. That's a classic trap. So many people get stuck waiting for the market to diff or something. But the truth is, no one can really predict the market.
So what's the alternative?
Yeah?
I mean, if we shouldn't wait for the perfect moment, what should we do?
Focus on time in the market, not timing the market. The sooner you start investing, the better. Even if it's just a little bit, that's the power of compounding. You know, if you invest $100 today, gets a decent 7% return every year. In 30 years, that's almost $800.
Wow, that's pretty impressive. But if you wait like 10 years to invest that same $100.
Yeah, you'd only have about $400 after 20 years.
Okay, I'm starting to get it. So the takeaway is don't wait, just start investing, even if it's small.
Exactly. And to make it even easier, set up automatic investments. You pick an amount, it comes out of your account every month, and boom, invested without you even thinking about it.
That's a great tip. And speaking of investments, the source also talks about not getting into high return investments early on.
Yeah.
Specifically crypto and DeFi. I'll admit DeFi sounds a bit intimidating. Could you maybe break that down for those of us who aren't, crypto whizzes?
Sure, think of DeFi like a financial system, but built on blockchain. It cuts out the middleman, like banks. You can lend, borrow, trade, even earn interest, all direct.
Okay, so it's like taking control of your own finances. But how do you actually get those high returns in DeFi?
There are a few ways. Staking is popular. You basically lock up your crypto to help secure a network. And in return, you earn rewards like interest.
Oh, so instead of just sitting in my digital wallet, my crypto is actually working for me.
Yeah, exactly. There's also yield farming, bit more complex, but you're lending your crypto on platforms like Aave or Compound. You can earn some serious returns, but the risks are higher too.
So lots of potential, but definitely do your research before jumping in.
Absolutely. And speaking of risks, the source also talks about leverage, how they got burned by margin trading and options without really understanding them.
Yeah, leverage is definitely a double-edged sword. Can amplify your gains, but also your losses, right?
Exactly. Imagine you have $1,000 to invest. With margin trading, you can borrow, say, another $1,000 from a broker. So now you're trading with $2,000. If the asset goes up 10%, you make $200 profit. That's a 20% return on your initial investment.
Sounds amazing. But what happens if it goes down?
That's the catch. If it goes down 10%, you lose $200, wiping out your initial investment.
So yeah, not for the faint of heart. Need to know what you're doing.
Definitely. And the source also brings up focusing too much on short-term gains, chasing quick profits and missing the bigger picture.
Yeah, I've definitely been guilty of that. Trying to time the market, get in and out quickly. What should we be doing instead?
Shift your focus to long-term investing. Look for assets with strong fundamentals that you believe in. Growth stocks, dividend-paying stocks, even crypto with solid tech behind it.
So look beyond the daily ups and downs and focus on the long game.
Exactly. And that ties into the next mistake, not diversifying early enough. The source talks about putting all their money into one thing, and when that one thing went down, they lost a lot.
Ouch, that's a tough lesson. But diversification is something we hear about all the time. Why is it so crucial?
It's about spreading your risk. Instead of putting all your eggs in one basket, you spread them out. That way, if one investment doesn't do well, others might balance it out.
Makes sense. So what kind of things should we be diversifying into?
Well, you've got the traditional ones like stocks, bonds, real estate, but things are changing. You can diversify into cryptocurrencies, precious metals, even things like NFTs.
NFTs, like those digital art things everyone's talking about.
Yep, they represent ownership of unique digital assets, still relatively new, but another way to diversify and tap into a growing market.
Wow, so many options.
Yeah.
But I guess the right mix depends on your individual goals and risk tolerance, right?
Yeah, absolutely. Diversification isn't one size fits all. It's about finding what works for you.
So let's all take note and build ourselves a diversified portfolio ready for anything. Now let's talk about something that doesn't always get enough attention: networking and mentorship.
The human side of wealth building. It's not all numbers and charts. Connecting with people, learning from their experience is huge.
Yeah, especially for beginners, it can be really helpful to have that support system.
Exactly. Surround yourself with successful investors, join communities, find a mentor. It can accelerate your learning so much.
Like having a team cheering you on and guiding you through the ups and downs. Now let's address something that often causes a lot of debate: digital assets. The source mentions regretting not getting into cryptocurrencies sooner.
Yeah, I understand the hesitation. It's new. It can be volatile. but it's also evolving rapidly and has huge potential.
So even if we're not ready to go all in on Bitcoin, we should at least be exploring it.
Exactly. Think of it like adding a digital component to your savings and investments. Even a small amount in established crypto, like Bitcoin, Ethereum, or Solana, can be a good start.
Like dipping our toes into the digital ocean. Now, this next one is really interesting. Personal branding.
This is where personal development meets wealth building. The source realized that building a strong personal brand can open so many doors.
Wait, so we're talking about investing in ourselves now?
Exactly. In the digital age, your personal brand is your online reputation, your expertise. It sets you apart from the crowd.
But how does that actually translate into wealth?
It creates opportunities beyond a traditional job. A strong personal brand can lead to consulting, partnerships, even creating your own products.
So it's about taking control and creating your own income streams.
Exactly. Building a platform that showcases your skills and attracts opportunities.
I love that. Taking ownership of your financial future. But before we all run off to build our personal empires, let's bring it back down to earth. The source also talks about ignoring global trends and how that affected their investments.
Right, the big picture stuff, politics, economics, global events, all of that can influence the markets and your investments.
So we need to be aware of those forces and adapt our strategies accordingly. But how do we even begin to make sense of all that?
Stay informed, connect the dots. Let's say there's a shift in policy towards renewable energy. If you think that trend will continue, you might invest in companies in that sector. It's about understanding cause and effect.
So not predicting the future, but being aware of the present and making informed choices.
Exactly. And finally, the source talks about thinking it was too late to start investing, feeling like they missed the boat.
I hear that a lot. People thinking they need a ton of money or expertise to even begin.
That's a myth. With online platforms and resources, investing is more accessible than ever. You don't need a fortune or financial advisor to get started.
So it's about taking that first step, no matter how small.
Exactly. Start small, learn as you go, be consistent. Even small contributions can grow significantly over time.
It's never too late to take control of your financial future. Well, this has been an amazing deep dive into building wealth.
Remember, it's a journey, not a race. Build a solid foundation, make informed decisions, stay focused on your goals.
And we'll be back with part 2, where we'll delve even deeper into specific strategies and tactics. Stay tuned.
Welcome back to our deep dive. We've talked about a lot, from investing basics to DeFi. But knowing what to do is one thing. Putting it into practice is another.
Totally. Let's get into some actual strategies for building wealth. I'm especially interested in how we can connect those global trends we talked about with smart investing.
Great point. One thing I'm watching closely is the whole sustainability and green technology movement.
Like renewable energy, electric vehicles, that sort of thing.
Exactly. Governments are investing heavily in those areas, which creates opportunities for companies involved. For example, the U.S. infrastructure bill had billions for clean energy projects.
So if you believe that trend is going to continue, investing in those companies could be a smart move.
Precisely. Align your investments with your understanding of where the world is going. Another area is AI and automation, transforming so many industries, creating new opportunities for investors.
It's exciting, but also a bit risky, right? How do we avoid getting caught up in the hype?
Due diligence and research are key. Don't just jump in because it sounds cool or everyone else is doing it. Understand the technology, the companies, the risks and rewards.
Be informed, not just reactive.
Exactly. Now let's talk about the psychology of investing. Our emotions can really mess with our decisions sometimes.
Oh yeah, I've definitely been there. Letting fear or greed take over.
That's why having a clear investment plan is crucial. Stick to it, even when things get emotional. Define your goals, risk tolerance, time horizon. Helps you stay focused and avoid impulsive moves.
Like a roadmap for navigating the market roller coaster.
Exactly. Another thing is being aware of your own biases. We all have them, and they can affect our choices without us even realizing it. Confirmation bias, for example, makes us seek out information that confirms what we already believe.
So how do we overcome those biases?
Diversify your information sources. Don't just rely on one news outlet or advisor. Get different perspectives, challenge your assumptions, be open to changing your mind.
Great advice. Now let's move on to financial planning. Can be a bit daunting, especially if you're not sure where to start.
Break it down into steps. First, set clear financial goals. What do you want to achieve with your money? Early retirement, buying a house, funding education, just financial security.
Having those goals in mind helps you make decisions that align with your aspirations.
Exactly. Then create a budget. Track your income and expenses. See where you can save and invest more.
Give your money a purpose.
Precisely. And within your plan, allocate funds for different things. Emergency fund, retirement savings, investments.
That's where diversification comes in again, right?
Exactly, but it goes beyond assets. Diversify your income streams too.
Right. We talked about building a personal brand for that.
Exactly, but also explore other ways to generate income. Freelancing, side hustles, online businesses, even rental properties.
Create multiple streams of income, not just rely on one.
Now, let's not forget about tax optimization. It's not about avoiding taxes. It's about being strategic and taking advantage of legal deductions and credits.
So being smart about how we manage our taxes.
Exactly. Maxing out your 401k or IRA contributions, for example, reduces your taxable income and grows your retirement savings.
A win-win. Any other tax tips?
If you're investing in stocks, consider tax-efficient options like index funds or ETFs. They tend to generate fewer taxable events.
Okay. I'm learning so much.
Financial planning can be complex, but the key is to start somewhere. Don't be afraid to seek professional help if you need it.
A financial advisor can be a great resource.
Absolutely.
Well, this has been a fantastic look at some practical wealth-building strategies.
Remember, it's not about getting rich quick. It's about building a solid foundation, making smart choices, staying focused.
All right, welcome back to the deep dive. We've talked about all these strategies, but now we need to figure out how to actually put them into practice.
You got it. Let's talk about some tools and resources that can help. You know, one of the biggest hurdles is just knowing where to start. There's so much information out there, it's easy to feel overwhelmed.
Totally like drinking from a fire hose.
Yeah.
So where do we even begin?
Invest in your financial literacy. That's key. And the good news is there are tons of free resources out there. Websites like Investopedia are amazing for learning the basics. Khan Academy has great personal finance courses, and Coursera even offers university-level stuff.
Perfect for building a strong foundation. But what about staying up to date on all the latest trends and news? Things are changing so fast.
Right. For that, I'd recommend subscribing to some solid financial publications. The Wall Street Journal, the Financial Times, Bloomberg. They offer in-depth analysis and keep you informed on what's happening globally.
Awesome. So we've got our education and news covered. Now let's talk about the actual tools for investing. Where do we go to buy stocks, bonds, crypto, all that?
That's where brokerage accounts and cryptocurrency exchanges come in. For traditional investments, platforms like Fidelity, Vanguard, Schwab are great. They offer a wide range of options and usually have lower fees than traditional brokerages.
And for those diving into the crypto world?
Coinbase, Binance, Kraken are popular and reputable exchanges. Easy to use, good security, and a decent variety of cryptocurrencies to choose from.
So many choices, though. How do we pick the right platform?
It depends on your goals, risk tolerance, and experience level. Some platforms are geared towards beginners, others are for more seasoned investors. Do your research, compare fees, security features, and what they offer before deciding.
Like choosing the right tool for the job. Makes sense.
Exactly. Now, if you prefer a more hands-off approach, check out robo-advisors. They use algorithms to create and manage a portfolio for you based on your needs.
Like having a virtual financial advisor.
Pretty much. Betterment, Wealthfront, Acorns are some popular ones, and their fees are usually lower than traditional advisors.
That's a great option for those who are new to investing or just busy. But what about people who want more control over their investments?
There are plenty of tools for research and analysis. Websites like Morningstar, Yahoo Finance, Google Finance, they have tons of data on stocks, bonds, funds, even crypto.
So much information, though, it's easy to get overwhelmed.
That's where those financial literacy skills come in. It's not just about having the data, but knowing how to interpret it and use it wisely.
Don't just follow the crowd. Think for yourself.
Now, let's talk about estate planning. It's not just for older folks. It's something to think about at any age.
Yeah, making sure your loved ones are taken care of.
Exactly. It involves things like creating a will, designating beneficiaries, maybe even setting up a trust to manage your assets.
Those are big decisions. Probably best to get some professional help.
Absolutely. An estate planning attorney can guide you through it.
Okay, so much to think about. But it's all about being proactive.
Wrapping up, I want to say building wealth is more than just numbers. It's also about mindset, about abundance, gratitude, generosity.
Aligning your financial goals with your values, giving back to the community.
True wealth is about more than just money. It's about our relationships, our health, our impact on the world.
Embrace the journey. Think holistically. Don't just focus on the strategies, but also on personal growth and purpose.
The tools and knowledge are out there. Take that first step.
And remember, you're not alone on this journey. We're here to support you.